First bank failure of 2024, but it probably won't be the last. Hey folks, how's it going? This article comes from the Daily Huddle. I'll have the link in the descriptions as always. But the first bank of 2024 has just failed. Now, we actually made it further into the year this year than we did last year. The first bank failure last year was in March. We were actually able to make it into April, believe it or not, almost to May. But this is just the first bank failure of the year. It probably won't be the last. And in fact, Jerome Powell himself has said that we're going to see more and more smaller regional banks fail before this is all over with. And that's from Jerome Powell himself. Quote, "It will happen." But this bank, getting to the article here, U.S. regulators just announced the first bank failure of 2024. The FDIC says it has stepped in to protect $6 billion in assets and $4 billion in customer deposits at Philadelphia-based Republic Bank. That name sounds familiar. And I want to say that they are one of the banks that stepped in to bail out one of the failures last year. I could be wrong about that, but I want to say one of the banks that failed early last year, part of their assets were bought out by Republic. But I would have to look back through that just to verify that. Anyway, the assets will immediately be handed over to Fulton Bank, a former rival that's also located in Philadelphia. Republic Bank's 32 branches in New Jersey, Pennsylvania, and New York will reopen as branches of Fulton Bank on Saturday for branches with normal Saturday hours, or on Monday during normal business hours. I'm a day or two late getting to this, so this has already happened. This evening and over the weekend, depositors of Republic Bank can access their money by writing checks or using ATM or debit cards. Checks drawn on Republic Bank will continue to be processed, and loan customers should continue to make their payments as usual. Well, of course, because it doesn't matter if the bank goes under, you've still got to make your payments, right? The failure follows last year's high-profile collapse of Silicon Valley Bank, Signature Bank, and First Republic, which were among the biggest bank failures in American history. The FDIC expects the failure of Republic Bank to cost about $667 million, which will be deducted from the FDIC's bank-sponsored Deposit Insurance Fund. Concern about the health of the banking industry at large has persisted this year, triggered by fears over the industry's exposure to the troubled commercial real estate market and unrealized losses on U.S. treasuries. All right, this is a really short article, but let's cut to the chase here. We've had several banks fail early last year, being bought up by other banks. The trend, though, that has been going on, all of these banks are still making the same bad decisions. They're making the same poor investments, the same poor loans. So none of that has changed. All that's happening is that when one bank fails, the FDIC comes in, regulators come in, they take over the bank. Excuse me, folks. I'm sorry. They take over the bank, and some of the bank's assets are purchased by other small regional banks. It's not often that you see these larger banks like JP Morgan Chase, Wells Fargo, what have you, come in and buy up these small banks that fail. Sometimes they do, but here lately, it's been more of other small regional banks have been coming in to buy out their rivals. But what's going unsaid what's not being said is that a lot of these banks, like Fulton Bank, I know nothing about this bank. I'm just making a prediction here. I'm assuming that Fulton Bank has made a lot of the same poor judgments in managing their business that Republic has, that Signature Valley Bank and all these others have. They're still making these low quality loans to people that really can't afford to afford the loan payments. They're making these really poor quality investments, basically gambling with their customers' money. And understand, I've said this before, understand that once you deposit your money into a bank, that money is technically, legally no longer yours. You become then a creditor of that bank. The money actually belongs to the bank itself. So when these banks come in and buy out these failures, it's not really solving the problem. And as Jerome Powell has said himself, you will see more and more of these small regional banks go under. It will happen. My advice to you is not to keep all of your money in these banks. And now I know it's almost impossible to do business these days, pay your bills and what have you, without using a bank account. That's almost impossible these days. And they want it that way, so that you have to put your money in the banks, and then they can trace it, they can track it, track your purchases, they can tax you at every transaction, at every level of business. That's why they want you to put your money in these banks. Why they want you to have no other choice but to hold your money in these banks. I understand how hard it is, but you need to get into the habit of only keeping just enough in the bank to cover what you absolutely have no choice but to use the bank for. You need to get into the habit of keeping cash on hand and keeping a cash reserve on hand at home or in some other secure location. And by secure location, I do not mean a safe deposit box at a bank. And I'll tell you why. When a bank goes under, not only do they lock down the checking accounts and the savings accounts, but they'll also lock down these safe deposit boxes. And you may or may not have access to whatever's in that safe deposit box. So when you have your cash reserve separate of your checking account and your savings account, do not keep it in a safe deposit box. You would be much better off keeping it in a floor safe or a wall safe or something like that in your home. And that safe needs to be hidden. Okay, so because with the rise in home invasions, burglaries, and things like that, we're seeing a rise in that, and we're going to see even more of that in the future. You need to have that safe at home hidden where it's not going to be obvious, where it's not going to be easily found. We're going to have to go back to the days of having a floor safe under your carpet or hidden behind something, and not the obvious place, because everybody knows about safes behind paintings or portraits or pictures. That's an obvious place to put one. You don't want to do that. But you do want to have a cash reserve at home in a secure location that's not easily found by anybody breaking in and rummaging through your house. I'll leave it up to you to do the research on where and how to choose a location like that. I might do a video later on about certain options, but for now, that's got to be up to you. But understand that all of the problems leading to these bank failures. And again, this is just the first of this year. It probably won't be the last. It certainly won't be the last before everything falls apart, because we're going to see more of these. I can't predict how frequently they'll happen. Nobody can. But the banking system is under severe strain, particularly with the small and regional banks. Cracks are forming. And there's a lot of these banks that, despite what they say, they're not solvent. They're very insolvent. And you're not going to be able to guarantee that you're going to have access to your money. And when a bank fails like this, right now they're saying that you can continue to do business as usual. Checks will continue to be honored. Your deposits will be available by ATM card and what have you. There's no guarantee of that. That may be the case this time. But understand that I don't remember what the limit is for the FDIC, but I do remember going over the numbers once, and the FDIC is only capable of insuring deposits at 2, maybe 3, maybe 4 of the largest banks at any one time. And 2 or 3 is pushing it, I think. I'll look up the numbers. I want to go look up all these numbers again and go back and do another video on this, because I'm sure it's changed. But the FDIC is only capable of insuring and bailing out failed banks, only a couple of them at a time. If you get 5, 6, 7, 8 of them happening simultaneously, the FDIC will not be able to insure those bank accounts. They will not be able to bail out those banks. And as a result, you will not have access to your money. In fact, you will probably lose your money. There's a limit to what the FDIC can cover in a series of bank failures. And 1 or 2 banks failing every now and then they can handle. Anything more than that, they're not going to be able to deal with. You need to understand that, which is why it's important. Keep only enough cash in your bank account to cover what bills you need to cover, and start keeping a reserve of cash at home, at least for as long as cash is still readily accepted at stores and businesses. Understand that in itself, acceptance of cash is no guarantee. There is nothing that says that, despite all of the rumors, all of the beliefs, there is nothing that says cash has to be accepted by every business. It's optional. And a business can come in and say, we're no longer accepting cash. The Federal Reserve can come out and say that cash is no longer accepted. There's no guarantee that cash will be accepted. So as long as it is still accepted, you need to have it in reserve. But you need to have plans in place for the event that when cash is no longer accepted. And it won't happen overnight. At least I don't believe it will. What they will do is they will give you a warning. They will give you a deadline, so to speak, of how much longer cash will be accepted, because they'll want you to turn in your cash and redeem it for digital currency or some other spin on it. That's the way they're going to go about it. You're going to redeem your cash for a certain amount of digital dollars or digital credits or what have you. And that's going to happen when we move from cash to the digital currency, which is coming. Don't buy into this. It'll never happen, because it will happen. That's only a matter of time as well. That has to happen at some point, because at some point the U.S. dollar will fail. And the only way that the United States can stay solvent is to reset the currency. And you do, the next way that they're going to do that is by switching over to a digital currency. and they're going to say, see, our money is still valid. Well, everybody can trade in their US dollars, their paper currency, and their coinage for X amount of the digital currency. You'll have a short window when you can trade in. Once that window is closed, you're going to be stuck with it. And understand that even while that window is open and you can trade in that currency, you won't be trading $100 in paper currency for 100 digital dollars. That's not how it's going to happen. It's going to go more along the lines of $100 in paper currency for $30, $40, or $50 in digital currency. That's how the reset happens, so that the digital currency is much stronger than the paper currency was. So you'll immediately, by surrendering your cash, lose, I'm going to say 50 to 60, maybe even 75% of its value. We're well on our way to debasing our currency right now as a country. And this final push will devalue it so much that you're not going to have a choice but to trade it in. And you're going to lose the vast majority of your value when you do trade it in. So again, just to recap, this is not the only bank failure that's going to happen this year. There might only be one or two. There could be as many as 10 or 12. It's hard to say. There will be more bank failures before it's all over with, though. They may not all happen this year, but there will be more before it's all over with. And before it's said and done, we will be switching to a digital currency. You will have a short window of time to trade in your paper currency for digital dollars, but you won't get equal value for equal value. You're going to lose 75, 50, 75, somewhere around there % of your value when you switch over to the digital currency. But for now, you need to keep a reserve of cash on hand, at least until cash is no longer accepted. This is also a reason why so many people are recommending stacking gold and silver as a store of value for when in hyperinflation hits, and it is coming, but also for when dollars are no longer accepted, you'll have that alternative. And I know there's a lot of preppers out there that don't believe in stacking gold and silver because they say you can't eat it. My response to that is you can't eat paper dollars either, but you use them, right? There's a place for everything. Everything has a place and a purpose and a way it can be used. It has a spot to fill. But that's all I'm going to get into in that. But understand, this is what's happening, folks. And the policies that have led to these small regional bank failures have also affected the larger banks, but they're able to kick the can further down the road. And these policies haven't stopped. Just because you're only seeing the small regional banks affected right now doesn't mean the bigger banks aren't going to be affected later on. It's going to hit them all. The larger banks just have the ability to put it off a little bit further down the road. But they've still been playing the same manipulation game and poor judgment and poor investments. They've still been following the same poor policies. So this is what's happening, folks. And I've told you what you need to do. It's up to you to analyze your situation and figure out what's best for you. I can't make that decision for everybody else. My recommendation is what I've already made. And that's what I'm doing. I believe you should do the same. But again, you have to make your own decisions. Anyway, that's all I've got. I appreciate you guys watching. Like, share, subscribe if you haven't. And until next time, folks, stay safe, keep prepping, take care. And until next time, I'll catch you later.